Hello students, in our previous video we explained how ledger works, the principles of ledger as to posting rules, the balancing rules, isn't it? So I hope you all have gone through the session. In this session we are discussing the concept problem 1 of our Lator Academy study material. I request you to please refer our academy study material concept number 1, Dhritarashtra and Company. In this problem, they have asked us to prepare ledger accounts with respect to bank account, cash account, purchase, sales and fixed asset account. So they have given the balances as well and the transactions. So before posting the entries, we have to update the opening balances. So the bank account, which is a treasure chest, 50,000 rupees, asset always shows debit balance. We have to write it on the debit side as a to balance brought down. And next, similar cash account, the cash king, 2 lakh rupees they have given. Again, asset always shows debit balance. So we have to write it on the debit side beginning to balance brought down, 2 lakhs. And fixed asset, again the reliable old timers, we call them again assets, always shows debit balance, 25,000 rupees. So debit side to balance brought down, 25,000 rupees. So let us start posting these transactions. Students, you please go through our journal videos so that you can be easily post the journal entries to respective ledgers. So before posting, you should be understanding the transaction and you should be able to journalize first. In your mind, you have to frame the journal entry while posting. So let's start first understanding the journal entries and then post. And in this problem, we are preparing those ledgers which the question is asking us specifically to prepare. So rest of the other accounts we are not preparing. So first transaction, Dhritarashtra settled 10,000 rupees an amount due to creditor Jayadrat through check. So the journal entry here will be Jayadrat account debited to bank account, isn't it? So bank account has to be credited by Jayadrat account 10,000 rupees. And the second transaction, discount received from Duryodhan 200 rupees on account of early settlement of account 5,000 rupees. So the journal entry will be Duryodhan account debit 5,000 rupees to cash account 4,800 rupees to discount received 200 rupees. So in this case, we have to pass this entry and we have to post as to credit side of the cash account by Duryodhan 4,800 rupees. The 200 rupees will go to discount received account. Moving on to the third transaction, telephone expenses paid in advance. Actually, it is a telephone deposit paid in advance 1,000 rupees to BSNL Limited through check. So the journal entry will be telephone deposit account debited to bank account. Student, remember this is not a expenses, this is a deposit. Telephone deposit is an asset we have debited here, and bank, since we are issuing check, bank has to be credited. So journal entry is telephone deposit account debited to bank and bank account is credited by telephone deposit account. Moving on to the next transaction, payment of outstanding rent 12,000 rupees to Srimati Draupadi. In this case, journal entry is Draupadi's outstanding rent account debited to cash account. Outstanding rent is in the nature of liability, always shows credit balance. But in this case, since we are paying it off, outstanding rent will reduce, it will be debited, and cash is going out of the books of accounts, we have to credit. So outstanding rent account debited to cash account, and cash account is credited by outstanding rent account. Moving on to the next transaction, advance received from customer Mr. Karna 25,000 rupees but no sales made. In this case, we have not sold the goods, but however we have received advance money from the customer Karna. So journal entry in this case will be cash account debited to Karna account. So cash is being debited, and on the left hand side we have to write to Karna account. Moving on to the next transaction, depreciation on fixed assets. So depreciation on fixed assets, the journal entry is depreciation account debited to fixed assets account, and fixed assets account is credited by depreciation account 2500 rupees. Moving on to the next transaction, sale of goods to Drishtyadyum for cash 15,000 rupees. Students, please remember this is actually a cash sales. So the journal entry is cash account debited to sales account, and sales account is credited by cash account. So both accounts, since we are preparing, so we have to post it accordingly. So sales account is being credited by cash account, and cash account is being debited to sales account 15,000 rupees. Moving on to the next transaction, bad debts written off earlier recovered from Dharmraj 5,000 rupees. Students, in this case the journal entry is cash account debited to bad debts recovery account. Bad debts recovery is in the nature of income, so we have to credit it, and cash is receiving, we have to debit. So while posting, cash debited to bad debts recovery account. Students, you should not make mistakes here, because since it's a bad debt recovery, you should give credit to the bad debts recovery account and not to the debtor account. So please refer our journal entry problems and discussions, you will be able to understand properly. And next transaction is money withdrawn from bank by Dhritarashtra 22,000 rupees. Students, here the money withdrawn from bank is for office purpose, because we should not assume that it is for personal use. So few students, they commit mistakes by treating it as a personal purpose, but however in the absence of information we should not assume that it is a personal, it is used for office purpose. So the journal entry is cash account debited to bank account. So accordingly we have to post it on the debit side of the cash account to bank account, and opposite we have to pass posting entry bank account is credited by cash account. On the right side of the bank account we have to post it by cash account 22,000 rupees. And moving on to the last transaction, purchased goods from Yashoda 2,000 rupees, she allowed 10% trade discount and 10% cash discount. Students, remember our earlier discussion that trade discount will not be recorded in the books of accounts. So here the trade discount is 10%, that is on 2000 we get 200 rupees. So the net price will be 1800 rupees. But however, since cash is being paid immediately, so we are getting 10% additional discount, which will be appearing in the books of accounts. So the journal entry in this case will be purchases account debited to cash account to discount received account. Purchases, we have to consider net amount 1800, whereas discount account should be credited with 180 rupees, and cash is going from the books of accounts is 1620. So we have to credit 1620. So the journal entry is purchase account. On the debit side, the posting has to be done to cash account 1620 and to discount account 180 rupees. And on the cash account, on the right hand side, that is credit side, we have to post it by purchase account 1620. So we have posted all the entries into their respective ledgers. After posting all the entries into respective ledgers, the next step is that ledger balancing. So let us start balancing one by one. So cash account, first step is that while balancing, we have to check the totals of debit side and the credit side first, and whichever is having the highest total, we have to mention it on the both sides of the debit side and the credit side total. So in this case, the debit side total is more than credit total, so 2,67,000 have to be written on the both sides of the total, and then obviously it will be showing the balancing figure on the right hand side, that is credit side, as 2,48,580. So remember students, the steps for ledger balancing is that first you have to check the totals of both sides and then write the highest total on the both sides and compare and arrive at a difference amount as a balancing figure. Similarly, moving on to the next account, bank account, check the totals of the both sides. In this case, the debit side total is more, so accordingly we have written 50,000 on the both sides, and the balancing figure comes on the right hand side as 17,000 rupees, because the debit side, when debit side total is more, the shortfall or the difference amount come on the right hand side. So the bank account is showing a closing balance of 17,000. And moving on to the fixed assets account, since there is only one entry of depreciation, so the opening balance 25,000. When we compare both sides total 25,000, we have to write on the both sides, and then the difference amount comes on the right hand side as 22,500 as a balancing figure. And moving on to the next purchase account and sales account. Students, generally we should not balance it purchase and sales, because they are the nominal accounts and it has to be transferred to profit and loss account. But however, assuming that there are other transactions are pending for these accounts, we have, for time being, we have balanced it. But generally at the year end, we should not balance the nominal accounts, especially incomes and expenses, because they will be transferred to trading P&L account and should not be balanced. So in this case, we have momentarily balanced it by doing the stepwise comparing the highest totals here. In this case, the debit total is more as compared to credit side total. So 1800 we have written on the both sides, and on the shortfall 1800 has been written on the credit side and shown as balance carried down and balance brought down. Sales account also, we have to compare the both side totals. 15,000 only the credit side is appearing, so we have to write the both side total, and the debit side, it will be the shortfall or the difference amount, we have to write it, and accordingly that will be the closing balance. And in the next year actually the purchase and sales will not come the balances in the next year, since it is only prepared for 1 month. So the transactions are yet to be posted for the further months. So for time being, we have balanced it. That's it. We have discussed this concept problem 1 so elaborately, and if you have any doubts, please revert us, and if you like the video, please like and subscribe our channel Lator Academy. Thank you.